Okay, what is up, people? Welcome back to another stream. Hope everyone is doing well. As always, guys, if you're enjoying the content, please be sure to drop a like, subscribe to the channel, and of course, make sure you do go and hit the bell so you don't miss out on any streams or uploads in the future. Check out the Discord channel to Elevating Traders, completely free to join, linked in the description below. You can also find at the top of the chat. You can share ideas with other people, see what other people are looking to trade, chat with myself there. If you're looking to join a community, go check it out. Links in the description, absolutely free to join. But guys, welcome back to another stream as always. We'll go through USD side of things first, take a look at the dollar, USD majors, gold, silver. We'll go through different pairs. Of course, any requests, let me know in the chat. Of course, any time frames as well, let me know too. Most of the time, I will take a look at the 4-hour chart and time frames around the 4-hour, but if you want me to be a bit more intraday, let me know. I will get to USD JPY soon, Raphael. First, I'll just go through the USD pairs and then we'll discuss some of the yen pairs because they're looking pretty interesting as well. But we'll start with the DXY as always, get a feel for the dollar. At the moment, we have seen a pretty bullish dollar since the start of the week, but my bias is pretty bearish. I'm still looking for more downside for the USD. My expectations is still a swing back down to 98. I said yesterday that price for me can pull back anywhere within this range here, and I would still be pretty bearish, expecting a continuation. Of course, this is the low, that's the most recent high, which of course gave us the new low. So technically speaking, if price was to break to the upside above this point, that would be a break of structure, and I would have to probably reanalyze. I probably still would be pretty bearish as a whole with USD because I don't see us pushing back to highs, but it might be a bit more of a complex pullback. We might consolidate a little bit, so I have to reanalyze and go from there. But at the moment, still respecting structure, still in an area where lower highs potentially going to form. We're seeing some rejection this morning. See a bit better on the hourly chart. Perhaps that could be the start of potentially a bit of a lower high. Need a bit more development to really confirm things. It could end up being a bit of a head and shoulder pattern with the left over here, the head, possibly a right shoulder forms. Then we snap lower. So there might be some downside opportunities off the back of that, but there's a lot of development that needs to be done for that pattern to really present itself. We're in an area where we could sell off, but at the moment, need a bit more information, a bit more signs that says, okay, we are about to. And what I mean basically is rejection, momentum. We'll see how this 4-hour candle does close in the next hour and 51 minutes. That could look a lot different in the next 2 hours basically. So wait to see how it closes, wait to see how momentum shapes up as well. I do think we are in an area where we're likely to form a lower high. So I'm looking at USD starting to push lower, and of course targets back to the prior low, but eventually I do see us still pushing back to 98. And we're in a similar situation with Euro. Euro's been pretty, Euro's been pretty weak as well. Still within the confinements of this range because we have been pretty steady with these higher lows. So as long as we don't go and violate structure, break through that low there, I do stay pretty bullish with Euro. We are more or less pulling back into a nice trend line that potentially could act as support as well. I was looking at this zone here yesterday. Respect the prior high of resistance, potentially could act as support and send us higher. We saw a brief reaction on the lower time frames, but didn't really get going. And yeah, price did since go and break through that level. So since that level is not holding, I'm also looking at this area of the trend line. Again, same situation, need to stay above this low. As long as we do that, the bullish bias does remain. But yeah, a bit more of a deeper correction than I was expecting there for Euro USD. But as long as we maintain the bullish structure, I'm still looking at buys. So we'll see how price reacts with the trend line, even how it reacts potentially with that low. We might even double bottom there before continuing. I'll keep an eye on that as well. But yeah, still very bullish on Euro, still looking for price to climb back to highs and eventually go and hit these swing highs up there, 157, sorry. So that's still the expectation with Euro USD. Although, yeah, the pullback is a bit more, is a bit deeper than expected, but we're still in the confinements of that market structure. So as long as we don't break through 1.125, the bullish bias does still remain. Over with pound USD, same situation here as well. Still very bullish on pound as a whole. We've of course cleared through major resistance last week, and that has made me very, very bullish on the pair. And the only way for me to become bearish, or at least not bullish, is to see the market climb back underneath that level. If we were to close back below this week, that would be a serious red flag there for pound USD, because essentially the breakout from last week is dismantled and is no longer the breakout. That would then be described as a fake out, and that could of course be a bearish signal for more downside. So I don't want to see price close back below there on the weekly or even the daily chart, to be honest. I don't want to see us close back below that. The main expectation this week is to hold this area support and continue higher. I also like this range here, just slightly lower, around 1.344. If the market would be kind enough to come back and revisit that, I think that looks like a nice place for a buy, and naturally just looking to swing it back to resistance. Pound USD is very much in a bullish market on the full hour, daily, weekly chart. Momentum's up. The only thing I don't like about pound USD is that we're just a bit high. You know, the market is a bit stretched. We've been bullish since the low, since Jan basically of this year. The market's been very, very bullish, so we are quite stretched, and we haven't seen much of a pullback. You know, that's the biggest pullback we had, and it was quite violent as well. So as a swing trader, this is not necessarily a trend which I'm overly excited to trade, just because of how stretched we are. I like to see us kind of have a deeper correction at some point, and then, you know, something like that could convince me to get back along there for pound USD. The buys here, I think, still look good, but you know, I wouldn't hold them for more than a couple days, especially if you can get it back to the high. I think that's a healthy target and call it a day there. In terms of dollar CAD, dollar CAD's had some nice retracement as well. We are pulling back into a nice area where potentially we could start to sell off again. I'm noticing a lot of USD pairs in some areas where we could bounce, so that's definitely something to keep an eye on. These are the two levels I marked out for dollar CAD, this brief area of support before we rally to the downside. A lot of momentum came from there. We're back revisiting that area now. And of course, we do have this range up here. Same situation, lovely consolidation, big drop to the downside from that area too. So both these areas could act as resistance, supply, and give us a continuation. Overall, the market is still very, very bearish for dollar CAD, and I'm still looking for a little bit more downside. I do think there's a good chance the market does come back and retest this area of demand, this brief range where we ripped to the upside with a lot of momentum. And since that breakout, we haven't come back to revisit that area. So I do know there's going to be a lot of buying pressure in that area, and hence the market could be attracted towards this zone. So I do think there's a good chance that dollar CAD just makes its way back to that level. And since we already have a pretty healthy bearish structure in place, lower lows and lower highs, again, as long as dollar CAD does not violate this swing point here, I am looking for this to be a pullback and looking for a continuation. So very, very bearish on dollar CAD. As long as we stay below 1.4, looking for a push into 1.36 basically. In terms of opportunity to short, 1.385 and 1.392. The zones are, I'll call it as. At the moment, still not seeing much rejection. Very sideways here as we come into that level. Need to see price kind of really show momentum to the downside to really justify an entry. But we are starting to slow down, and I would definitely keep a close eye on how things develop here. Dollar CAD is a pair which I am interested in getting involved with. So I do still see a lot more downside for this one. And again, at least a swing back into support. Aussie dollar, again, not the biggest fan of this price action. We're kind of just slowly ascending to the upside. Not a lot to go with this one, to be honest. Just very, very choppy in this ascending channel. Not really market structure, which I'm looking to trade in myself. I just define this as, market kind of consolidating slightly to the upside. So I want price to break away from this, potentially go put a higher low in, and then that's the trade I'm looking to take. Because now we're coming back into fresh lows, we're taking out some weaker structure here, and that's the opportunity which potentially could give us the big swing. Because right now, the fact that we are on this ascending channel just represents the market is tired. Yes, we're still slowly trending to the upside, but we are still tired. So I do think we can potentially break lower and again, try and find those higher lows to pick up and take to the upside. I've talking about the 0.65 area for a while now. I still think that's a great place to go long from. The big question is, do we get there or not? I have no idea. I just know that if we do get there, I'll be ready and waiting to take the trade. And again, looking at this inverse head and shoulder pattern, left head, right shoulder, and of course, that's kind of like your neckline there. So yeah, Aussie dollar very bullish longer term. I'll probably say I'm bearish short term just because I'm looking for a bigger retracement, but I don't see a short to take advantage of anyway. So just kind of focus on the buys here, and hopefully we can take some longs. But still a long way to wait, even if the price does get there. So not a lot to do with that pair in my eyes at the moment. New Zealand dollar, again, just kind of boxing this off as a range, to be honest. I still like the buys down low. If price was to push there, looking at big double bottom essentially, maybe we can tag back into some support here. Prior resistance turn support there as well. So that would be a nice complement for the trade. But long term, similar with Aussie dollar, I'm pretty bullish for NZD/USD. So if I don't get this opportunity here, I wouldn't mind a breaking retest of this level here. Let's say if the market does rip to the upside very well, this does look like a nice place for a buy. It's been resistance very well on 3 separate occasions. So I think there's a good chance it does act as support. And I think that'd be a great place to put a stop loss below and hopefully capitalize on a continuation back to highs. So I do have a couple opportunities which look a little bit more reasonable here with NZD/USD. I like the longs here still. If we were to get there, we'll have to wait and see. And if price does decide it wants to break to the upside, well, the retest could look interesting as well. But in terms of the bigger move, still pretty bullish on New Zealand dollar. I'm still pretty bearish on USD as well. So long term for these USD pairs, I do think USD weakness will be a big driving force for all of them. In terms of gold, we did see some rejection yesterday, so I've been pretty bearish on this one. We haven't really got going with gold, but the key thing is we're still below this descending channel. We're still respecting the upper end of the channel. So as long as that stays true, I stay bearish. If I see price go and clear this resistance and see a strong close above this, then I stand corrected. And at that point, I'll be looking for a swing back to 3,500 for gold. So I could be pretty bullish on gold on this one, but we need to clear that resistance and break out the channel. If not, we've got a very good chance of another lower high forming here. One over there, second over there, and that's your third. And of course, if that is respected, you could probably see a swing back into support just below 3150 there. So I'm pretty bearish on gold for now. I think a nice entry for gold would be a nice double top at the highs. Let's say if we rally back into resistance again, respect it well, I think that's a really nice entry signal. Stops above the high there, and targets more or less back into support. I think that could look good there. But of course, if we were to break through, I would switch the bias around. But for now, still pretty bearish there with gold. And in terms of silver, not much of an update with silver, to be honest. Yeah, still very much just in this range. I do think long term we are likely to break higher. The reason why I do have that long term bullish bias is simply because of the long term bullish trend we've got here. So I do expect more upside. There's no signs of this trend not continuing. So I do think, again, it will continue. And yeah, I do expect to see new highs past this swing high here at 35. So gold, silver, long-term bullish bias still intact. It's gold right now kind of hovering at that lower high. So for now, I'm pretty bearish on that until we break to the upside. In the case of silver, I'm just kind of neutral. High time frames bullish, but I just don't see an opportunity to trade that, especially when we're coming into resistance right now. It doesn't make any sense looking to buy there. Perhaps there might be some buys on the break and retest, but still not the biggest fan because overall trading in supply there. I don't really want to be looking to take buys at these prices. Hence why I've been talking about some bigger pullbacks to these areas where I know we're back at some bullish territories, coming to some areas of demand where I know I can get a decent swing position. But yeah, silver just very, very flat. I don't really see a clear-cut trade for this one, to be honest, so leaving it alone. And yeah, that's kind of where I'm at with the USD pairs for now. Tashi, good morning. I hope you're well. Welcome to the stream. Hope you're doing good. Alan, good morning. Welcome. Raphael, dollar yen longs, stop loss and take profit. Okay, I'll take a look. S&P 500 buying at 58.88. Okay, we'll have a look see as well. Beautiful Heart, what's up? Good morning from NYC. Wow, welcome. Must be early in the morning in New York. But what is up? Welcome to the stream. Hope you're doing good. Alan, I am placing settlement at 145.900 for USD. Okay, trading dollar yen as well. Yusuf, good morning. Hope you're well. I'm doing good. Hope you're doing good as well. Welcome. Okay, I'll take a look at dollar yen for Raphael, then I'll go to S&P. Of course, drop any markets you want me to take a look at in the chat, and of course, we can discuss together. And of course, I'll let you know my opinions and everything. But yeah, in terms of dollar yen, I probably would be looking to go long, to be honest. Preferably, of course, hindsight bias, I know, but preferably, I already, that was a bad stutter. I already want to be in the trade. There we go. I really want to be in the trade, not because we've just seen a bullish move, so of course you want to be bullish, but no, because prices have already reacted to support. So I don't want to be entering longs at these prices. This is where the price is just a bit extended. We're starting to find resistance. Not that we can't go higher. Absolutely we can. But that's not where I want to find any entries. Dropping to the lower time frames. What am I seeing? I'm seeing consolidation here. Not the best time to be buying. If you're like on the 5-minute chart, you're looking for a quick scalp of the day, fair enough. You might be able to get away with that. Something like this, a rally back into resistance, that might be the trade you're after. If that's the case, that does make sense. But if you're looking for any type of swing, like hourly chart and above, I would say the train's left the station. The train has left the station here with dollar yen. Ideally, you want to be long here. If you do get long here, there's no kind of logical place for a stop loss. I wouldn't want to have a stop loss here. I think that's a bit too tight, and I think that stop loss there is a bit too big. So, yeah, I would say that the ship is kind of sailed with dollar yen personally. I think the sells could look good though. I do like the shorts for dollar yen because I'm looking at this kind of head and shoulder pattern potentially forming. We've got a left shoulder over here, we've got a head over there, and possibly a right shoulder could form at this 145.500 level. Alan, you said you got a sell limit at 145.9, which would take us about here, which I think is a great place for a sell limit, to be honest. Lines up very well with that level. Possibly a right shoulder can form, and I do think there is a world where we do see dollar yen just continue that bearish trend we've had since the start of the year, pretty much. I think, yeah, since Jan, we potentially just continue this bearish trend here, and that could take us back to the low. So overall, pretty bearish here for dollar yen, pretty bearish. In terms of the bigger move, but for now we're kind of in the middle of nowhere, so I wouldn't really be looking to sell. I wouldn't really be looking to buy. I would just kind of let price do its thing, wait for it to come back into structure, so such as 145.5 or at least 142.5, and then perhaps we can look for some longs again or try and look for some sells again. Right now, not really in an area of convenience where I would say buys or shorts look good. So dollar yen longs, I don't really see them right now unless we were to return back to support. Then we can base a trade there and get a nice stop loss below the low. So the stop loss I'll probably place around 142. But sells, I think, gives us a nice opportunity. So I would keep an eye on those shorts up at those levels there. In terms of the S&P, very bullish on the S&P. I like the price action a lot. It's been very nice and tidy. We respect the 200 moving average very well on Friday, I believe. Nice spike through the 200 there, respected it very well. Then Monday's candle, beautiful bullish engulfing candle, really shows momentum is shifting back with the buyers here. So I do expect just more upside here with the S&P. In terms of opportunities, if price can come back and retest this area, I think that's a great place to go long, especially if you're looking at maybe like a 15-minute chart, because we are starting to put this bullish structure in. So if I just be a bit more precise, you got the high, low, high, low. Now I would love to see price come back and respect this high and use that as support for a continuation. I wouldn't even mind a retest of this zone here as well. But yeah, that I would say would be the first area of interest. So you said you got 58.88, which is around there. Not bad. I mean, where's your stop loss placement for that, Alan, for the S&P? I mean, anywhere within this range, I would be bullish. So, of course, I marked out 2 levels on the 15-minute chart, which I'd focus on. But, you know, we could dip in between those 2 levels, anywhere between 58.98 and 58.58. A lot of 8s there. I would expect a high low to form and a swing back to resistance. But yeah, S&P very, very bullish on this one. Good morning, Romeo from South Africa. Big up to yourself. Hope you're doing well. Welcome to the stream. Oh, that's a tricky. Desalen, probably saying that incorrectly, but welcome to the stream. Pound NZD, we'll take a look, no problem. If there's a chart that you guys do want me to take a look at, just drop it down in the chat. Getting chat and chart mixed up, and I will take a look at it. And of course, any particular time frames, let me know too, because I'm going to spend most of my time on the full hour chart. But if you do want me to drop a bit more intraday, let me know. But yeah, pound NZD, strong rejection yesterday. There was actually a strong rejection overnight. Do we have some NZD news? I might have missed that, you know, because I woke up this morning, I saw NZD doing a craziness. Yeah, we had the interest rate decision. I completely missed that. But yeah, we did have some NZD news last night. Interest rate decision that dropped for NZD, but we have seen a strong reaction. I wonder what was said in the press conference there. Because, of course, rates being dropped is normally not a good thing for the currency, but in this case was good for NZD, or at least the initial reaction was anyway. So yeah, with pound NZD, a bit of a bearish reaction. I was actually looking to short this pair, but we've kind of gone past my entry now because it would have been on that candle, which closed whilst I was sleeping, so I wouldn't be able to take the trade anyway. But if it does revisit that price, I can still find an entry with a similar stop loss as well. It just wouldn't be on my entry candle. But yeah, the key thing I'm looking for pound NZD is a really big head and shoulder pattern. We've got resistance over here taking it across. So of course that would be your left shoulder, that would be your head, and that would be your right shoulder. And the reason why I like the setup quite a lot is because price is really corrective on the way up. You know, this is a pretty substantial trend. It's been trending for a while, but you can see how corrective we are in this bullish leg here. Which isn't really the characteristic of a healthy trend anymore. You know, we should be seeing more impulsive behavior to the upside, more corrective behavior to the downside, hence giving us that trend. Now, pound NZD is not the most perfect example to use because it can be quite corrective at times. You can see here was quite impulsive. There was a bit corrective as well. So it's not the cleanest chart you ever see, but we are very corrective and we are having a lot of trouble at resistance right now. So as long as this level can hold at 2.274, I do think we can see a bit of a drop here for pound NZD, and that'll take us back into support here. And of course, if it is well and truly a head and shoulder pattern, we should see that neckline snap and see more downside beyond that as well, because this could be potentially a bit of a top to the trend. So yeah, pound NZD I would be pretty bearish on. I do think there's more downside to be had. I think if you can get a stop loss above the highs here, you're in a pretty safe place, especially if you can get price to revisit that area and get a better entry. And then I'll say there's a pretty big swing to be taken advantage of. Again, doesn't necessarily have to be looking for the big swing there. You can take profits at this level, at this level. Those are all good levels to bank profits and call it a day potentially. But pound NZD for me, looking pretty bearish, respecting that level pretty well. As long as we can maintain that, I do think there's a big drop to be had here for pound NZD. So yeah, and hopefully I can try and find an entry for that one. But to be honest, I might just stay out of the way because I am long New Zealand CHF, so I am already buying NZD. So I don't necessarily need to be jumping into pound NZD as well because I'm kind of doubling up my risk on NZD. And I'm okay to do that if I can get my initial position to break even, which it's not quite break even yet. But yeah, pound NZD shorts would be the bias. Knut, we'll take a look at Aussie Yen for you, no problem. Yusuf, Euro, GU, UJ on the 15, sure thing. Okay, so I'll go through Aussie Yen, then we'll go through the 15, then I'll go through my watch list and some pairs I'm looking to trade myself. But Aussie Yen, a pair which actually is on the watch list, funny enough. But I'm not too sure if I'll find an entry for this one. It looks like it might have left me in the dust a little bit. But essentially, I'm looking for price to hold this support level. I'm seeing a lot of inverse and head and shoulder patterns in the market recently. But again, another inverse head and shoulder pattern, left, head, right shoulder. Looking to see if we can respect this level and see some upside back into resistance and potentially further as well. So very, very bullish from this level. In terms of an entry, I was looking for price to come back and respect this support level here again, and it just about missed that on Tuesday. So I'm looking to see if we can double bottom here to rally, but I'm not too sure if we do revisit. I think the yen looks more or less quite weak right now still, so that should drive price high. We might still see one more stab lower, so I'm not going to rule that out. But in terms of the direction for Aussie yen, I am banking on a swing back to the highs. So that is the plan for Aussie yen. And again, in terms of a good entry, it would be if you can find an entry down low, stops underneath the low there. And that gives you a chance to capitalize on a pretty big swing back to resistance should it play out. There might be some structure which we can trade on the low time frames. Let's say if we can get price to break through highs here well, perhaps maybe on like an hourly chart or like a 30-minute chart, there might be some nice retests to take advantage of. That's if we don't come back and revisit support here. Then this type of break and retest might be the next best opportunity for Aussie yen longs. But yeah, very, very bullish on the pair. I do think we can return back to resistance at 95.5. So only interested in the longs right now for Aussie yen. In terms of euro on the 15. So euro on the 15, let's take a look. I'm actually quite interested to see how things are shaping up on the 15 because we're still getting that overall bullish structure, which is this swing low, that swing low. Could argue that swing low, but I think I'll just look at these three lows, 1, 2, 3, and potentially a fourth. That's what I'm looking at, a fourth forming, and that of course should take us back to highs and hopefully further as well. So I do like the buys here on the 15. I think at the moment, the market is still showing us bearish structure in terms of the lower lows and lower highs. So in terms of buying or entering Euro USD right now, it's not the best time as we do approach this kind of area of supply because we could still put another lower high in. We've been very consistent with that on the 15. So what would be a nice prospect would be a break of structure and then trying to catch that next higher low or the first higher low in that sequence, and then we can probably ride that back to highs and maybe further as well. I would anticipate this to be the next higher low, so I'm looking for us to break that structure. Not quite doing that yet. We are still quite corrective on the way up, so I do need that momentum to come into the market to really convince me, okay, this low is forming, price has broken structure well, and we're likely to form a higher low to continue. So I do want to see evidence of that happening. But yeah, if we can break structure, not only is the larger and the major structure to the upside, now the 15 is pointing the same direction, then yeah, a high low somewhere or a retest somewhere, we can debate that when it does start to set up. But that will be the opportunity I'll be looking at on the 15. I'm not really so interested with the shorts anymore. There might still be a sell back into the lows there, but I think the bigger move is with the buy, so that's kind of what I'll be waiting for. Pound USD, sort of a similar situation in terms of still very much got the trend to the upside, but at the moment, the past few days, of course, we've been trending lower with these lower highs here, and that's been taking us to the downside. Again, naturally, we've pulled back into another area of supply, which again could see us sell off again. But I do think the bigger move again for pound is to the upside. So similar to euro, if we can get a break of structure, then find some pullbacks. Hopefully catch the next higher low. Then again, that could give us the opportunity to ride it back to highs, or at least some areas around there, where we saw some bearish momentum previously. So pound USD pretty bullish bias on as well. At the moment, trading resistance supply, not the best time to be buying. If anything, it's actually not a bad time to be actually looking for some sells if you're looking to continue this bearish trend. But I do think the bigger move is likely to the upside. So I'll rather wait to see if we can get a break of structure there than try and plot some buys afterwards on a higher low. And again, on a retest of some structure or something like that, or breaking retest somewhere. But yeah, pound USD looking for more upside, euro looking for more upside, and dollar yen on the 15. This one pretty flat on the 15. I like it because we have broke structure now. We've kind of double bottomed really aggressively down at the lows here. So that's your first, second test, break of structure. So it does look like more upside is on the way. At the moment, it kind of looks like we're moving sideways here on the 15. So I would say potentially a long off the low here can make a lot of sense, and then some buys from there, because that will be a smart place for an entry and a stop loss below. I do like this area down here, but I don't think the market has that big of a retracement to come back and revisit that for a buy. If it does, keep an eye on it. I think it's a smart place for a buy, but in terms of momentum, I think this is probably a great opportunity. So 15-minute chart, keep an eye on support. What's that? 143.868. That would be my area of interest for a buy. If we do break through that, then I would still be bullish, but my focus would be down at these areas. But yeah, I like it because, again, we've been bearish for so long. Now it looks like we've double bottomed, broken structure. Perhaps now we can see some upside now and see the bigger move. So, yeah, that's kind of where I'm at on the 15 for those respective markets. What's up, Dima? Welcome to the stream. Hope you're well. Romeo, Aussie dollar caught a buy in the 15 time frame after I saw double bottom. Okay, cool. We'll have a look. I'm not a big fan of the Aussie dollar's price action, especially in the 4-hour chart. I haven't really been monitoring the 15, but the 4-hour still looks like a myth right now. So congrats on that position. DT, good morning, my man. Hope you're well. Welcome. Hope you're having a great day. Also, if you're feeling generous, can you take my next 3 work days because I need a vacation? Not that generous, my friend. Not that generous. I wish I was feeling that generous, but unfortunately, no. I'm gonna have to leave you to it with those work days, my friend. The High Elf, what is up? Good morning. What about Platinum? I haven't looked at Platinum in a while. Need to go see what's happening with Platinum, to be honest. Looks like it's setting up for a big breakout. Yeah, normally, from my experience, I've always seen Platinum make a big move first and then gold and silver normally follow afterwards. But I'll go see what's happening with Platinum. What's happening on Euro Yen? Raymond, we'll go take a look as well. Honey, Debash, are you any trade? Yes, I am. I'm long on New Zealand CHF. I entered that last Friday, I believe. Or was it Thursday? Nope, Friday. So yeah, I'm long on New Zealand CHF. I entered this one last Friday, held it over the weekend, and at the moment in a bit of profit. I'm looking for a pretty big swing here for New Zealand CHF. The main thought process behind this one is that we are coming from all-time lows here. So I'm looking for price to recover. It's a pretty much self-fulfilling pattern, especially with New Zealand CHF. Every time this one does see a new all-time low, it does recover pretty well. This is the weekly chart, and this is me zooming right out. This goes back all the way to 1980, so a lot of information for us to dive into there. But you can see every spike we do, we kind of do see some upside pretty quickly afterwards. Now, I'm not looking for anything crazy, but I do expect us to see more upside. So I have gone long. I've entered at support here. Price was respecting it very well. Really strong reaction, which gave me the entry I was after. I had some entity news last night, which did cause a bit of ruckus there, which I completely forgot about. So I woke up seeing that spike and was like, whoa, what's going on there? But it seems to push price in my favor, so I'm not going to complain. But still a long way to go. I'm at least looking to see if I can push it back into the highs here, which is 0.499. Take us back into basically the high of this range. But I do think we can push on back to 0.508 for the bigger move. But I will look to try and secure some gains at that first level. But yeah, no new positions this week to speak about, to be honest. Yeah, nothing new to speak about. Just holding New Zealand CHF at the moment. Anyway, we'll go take a look at Euro Yen. No, Platinum, sorry. What is Platinum? XPT, is it? XPT? Yeah. Ooh, wow. Okay, yeah. I remember looking at this move here for Platinum last week. Yeah, Platinum looking interesting, I must say. Ooh, looking very interesting, actually, because it looks like we might be breaking out of this kind of weird wedge pattern. I see what you mean. Platinum is looking interesting. Yeah, I didn't actually see that, to be honest. I mean, about time. Platinum has been ranging arguably since 2021, 2022. So it's been a solid 3 years almost of range bound. So the breakout could be quite spectacular. A range like this can give you a very, very big breakout, especially a metal like platinum as well. I wouldn't be surprised if we were to end up at 1279 back at those highs there. But yeah, I would agree with that. A breakout does look likely. I don't want to see price come back below this trend line. I think if we were to see that, that's a big red flag, of course. But if price can stay above that, yeah, I would expect a breakout, to be honest. It's a very, very strong close, minimal wick to the upside. Clearing that trend line with ease, to be honest. So, and it's by a decent distance as well. It hasn't just closed above us. There's a bit of a gap there. So yeah, I do favor platinum to break out, to be honest, and continue. I think in terms of taking advantage of opportunities, you're probably looking at very quick break and retest opportunities, because breakouts are not supposed to be slow. We're not supposed to break out and then move like that. Breakouts are supposed to be quick, slight pullback, quick, slight pullback for the most part. Of course, there might be a slightly deeper pullback here and there, but for the most part, it's very aggressive. So in terms of opportunities here, something like that would be something nice to look into. And in terms of managing the trade, I probably wouldn't have a target on it. I'll just let price do its thing, because this is a 3-year range roughly. If it's going to break out, you could expect to see price give us a swing like this in the opposite end. We could easily do something like that. So yeah, could be a big one. But yeah, I do agree. Unless we were to close back below that range, the trend line, I do see a breakout on the cards here. Let's go take a look at Euro Yen. So I haven't been the biggest fan of Euro Yen. It's a bit more on the choppy side of things. Other yen pairs have captured my attention far better than Euro Yen. But I do think there's still a very good chance we push back to the swing high. We respected support very well last week, We had that kind of mini sell-off with this bearish candle. We wicked through the low, respected it very well, and have had a very sharp recovery since then. Of course, yesterday, things were looking very bullish for Euro Yen. 3 beautiful bullish candles breaking to the upside. And this is exactly what I said yesterday for Euro Yen. If you're on the stream yesterday for the analysis for Euro Yen, I said, can we get a big breakout out of this noise? Because this is basically noise here. There's a lot of resistance, a lot of support, price just moving sideways. Price is confused about what it wants to do. Now with a move like this, it's pointing to the upwards. You know, we've seen some higher highs and higher lows. We've seen momentum come in now. Price is clearly broken structure to our left. You know, this is now bullish price action. Of course, nothing's guaranteed. We could still sell off a cliff for whatever reason. But in terms of direction, it's become a lot clearer now. So I did say yesterday that either a retest of this area, which price is not kind of doing too well, or a retest of this area, which we have just missed, but we could still revisit. I would be expecting a high low to form and a continuation to the upside. It would be nice to see price dip a little bit lower to come back to 163-ish, but we'll have to wait and see. If we do see a strong close above this level, then I think that's a good enough entry signal on its own. But yeah, for Euro Yen, I do expect more upside here. I do expect us to return back to 165 now and possibly see new highs past that point as well. We do have this bullish structure, which just about is still being continued. The fact that we respect the low here, which of course gave us the most recent swing high, was very, very important. And price just about did that. So yeah, I do expect Euro Yen to keep pushing. We have a quick look at the yen basket, which if this does see more downside, it should help Euro Yen push up, as they are inversely correlated. I said for Euro Yen, there's two main targets: this low here, which we kind of haven't quite met yet, and of course this low here. We had a lovely drop there yesterday. I'm looking at this kind of head and shoulder pattern on the daily chart. There's your left, there's your head, there's your right shoulder. I do think we can see price come back into support here. So I'm pretty bearish on Euro Yen. And I do think there's more downside to be had. We might still revisit this area here as well, so keep an eye on that. But that's the direction I'm expecting the yen basket to head towards. So if the yen basket is going to fall, that should push all the other yen pairs to the upside. Yusuf, no problem, happy to help. Nazir, pound Aussie. Sure thing, we'll take a look. On the 15, okay. High Elf on the monthly is even clearer with the two tops as the descending trend line. Okay, let me have a quick look at that. Okay, I see what you mean. Kind of like even that as well. But I need price to really break through that. But we still got, I thought we had longer. I completely lost track of time there. We've only got 2 days and 12 hours before this monthly candle closes, and I like how the candle's shaping up, and I also like how the wick is forming from last month as well. I like how that is forming, but yeah, I would say it's not completely out of the woods. There's still resistance to our left, which could still, rustle some feathers, but in terms of momentum, things are looking pretty good. Oh, you mean from the all-time high? Okay, you're talking about something like that? I mean, it doesn't give us that many points, though. It would be nicer if they all kind of lined up very well, but not quite. But yeah, I mean, in terms of the range here, that's where the important lies for me. But a solid close of the month does definitely provide more confidence in the breakout. But yeah, I mean, expecting a breakout is one thing, actually seeing the breakout is another, because sometimes, probably more often than not, you probably see more fake outs than actual breakouts. But I do like the looks of this. It does look pretty impulsive in the way we've closed there last week. If we could see another strong bullish candle this week as well, that really will set the tone, because that will finish off this month's very strong. This month's candle pretty strong. And yeah, I think that will take us very, very high. Okay, let me go through pound Aussie on the 15. We'll take a look at Euro USD as well. Yes, no problem. So 50-minute chart, pound Aussie. It's probably been a while since I've looked at this on the 15. But we are trading in an interesting area. The trend, of course, is very bullish in terms of the current structure on the 15. Still seeing higher highs and higher lows. So as a trend, you would be looking to follow that to the upside. But based on where we're trading, if I quickly expand to the 4-hour chart, I wouldn't suggest this is the best place to be looking to follow the trend. You got a swing high here, which did give us a pretty big sell-off back into these lows, and that is a very important high. And now price is trading in that high. It's a high which could give us a bit of a sell. Of course, we could definitely break through that, but would I want to be buying directly into that? No, probably not. I'd like to be, trying to pick up some lows down here where I've got a bit more room to trade with. Buying here, sure, you can catch the breakout, but you might also catch a move back down again. So on the 50-minute chart, I don't really see much here because I wouldn't be looking to sell it yet. I need some more bearish structure. I need to see some lower lows and lower highs, and then yes, I could look to sell. And I wouldn't look to buy it because of where we're trading into. But what I would wait for would be some bearish structure. We've got a high over there. Price has dropped. Can we create another lower high? Great. And then something like this could become a really nice short opportunity, and we could see price fall from there. So pound Aussie, nice place for a short. Yes, the 50-minute chart is trending to the upside, so there is a bullish trend there, but we are coming into pretty major resistance right there, so I wouldn't really be looking to buy into that. But if we can start to show signs of reversal, I think that's a great place for a short. And again, in terms of targets, you got some really big lows here to look at as well. So something like that would interest me. That could take maybe a day or two to shape up. But yeah, I wouldn't really be looking to follow that trend anymore with pound Aussie. Unless, of course, we do clear it and we do break above it. Then yeah, sure, you can look to follow that because we're not trading directly into resistance anymore. But at the moment, that is what we are going through. So I'd wait for that to clear before I would look for any buys. Okay, we'll go through Euro USD next. Platinum does look interesting. Yep, I do agree, MJ. Platinum does look very, very interesting. I wonder if we're going to get some interesting price action for silver as well. And, well, I mean, gold's already been interesting. Gold's already been on a crazy trend. But I'm looking at silver as well. It's kind of a similar situation to platinum in terms of it's been in a long-term consolidation. It does need a bit of a breakout to get the ball rolling again. I wonder if we could see platinum set the tone. Maybe silver looks to follow suit as well, because this has been pretty sideways. Yeah. But to be honest, that's kind of how silver moves. It does consolidate for a while. Then it has a breakout, consolidate, breakout, consolidate, breakout, consolidate, breakout, consolidate, breakout. Big consolidation, breakout, another consolidation. Well, I assume another breakout. So yeah, maybe we could see them both kind of start to rally. But I would say platinum looks by far the clearer price action. DT, I use Algo, Alpha and TradingView to spot breakouts and cross-reference it with the 200 SMA to spot support resistance. Okay, nice. Again, there's more than one way to identify breakouts and spot different opportunities in the market. The key thing, again, for a breakout is price clearing resistance. And then you can add confidence to that. Moving averages, trend lines, Fibonacci levels, RSI, there's many different things you can add to back up a trading decision. I think price is always going to be its most important indicator, because price is price at the end of the day. Price will tell you what price is doing, but you can always add more information to back up or support the claim that, okay, price is breaking out because of XYZ. But if you can get that solid breakout in terms of price, and then of course you can back it up with other things, which gives you more confidence for the trade and for the idea itself. But what I would say is don't want to rely on indicators and ignore what price is doing. Indicators support price. So first, if you can understand price well, then you can use indicators to support that claim. What you don't want to do is jump the gun and just go off indicators and not read carefully what price is doing itself, because that's when you kind of are not even using indicators properly as well. But yeah, interesting stuff on platinum, and I'm kind of wanting silver to follow suit, but we'll have to wait and see. I'm going to go through the rest of the yen pairs, because I said I was going to go through the yen pairs earlier, but I did get a bit sidetracked. We did go through Aussie yen, and we did go through Euro yen. Pound yen is probably one of the more bullish of the yen pairs. We've seen a lovely move to the upside. Prices pushed back into some healthy resistance there at 196.3, and I think that's where price is heading towards. Really, really nice breakout yesterday. And I do think this trend here of higher highs and higher lows is just going to continue. So for now, I am pretty bullish on pound yen. I do think there's a bigger move to the upside for pound yen as well. If I go to the daily chart, the fact that we just about broke structure here as well, I think is pretty pivotal. And I do think that could take us back to resistance all the way up here, which is 198. I mean, I probably would actually just consider the high here at 199, to be honest. And then we'll go from there. I do think the long-term move is still bearish. I'm not quite gone away from my bearish bias for the yen pairs. I do think there's still a big drop. I think we might push double top and then push down, but we'll save that chat for another day, because right now we're still focused on the buys for now, and I still think there's upside to be had. In terms of a nice opportunity to get long for pound yen, as I mentioned yesterday, just to retest the resistance, really, I think that would be the smartest place to go long. It looks like price is finding a lot of support now, so I might worry if we do get here or not. We might potentially find support here and rally from there. If price does reach this area, 194, I think that's a very smart place for a buy. And entries, stop losses in that area, take it back into resistance. And then 196.320, I think makes a whole load of sense. So yeah, pound yen, very, very bullish on. New Zealand yen, a pair which I've been looking to try and get involved in, but not too sure if I will. I was talking about double bottom here yesterday, but again, especially with the NZD news last night, I mean, it hasn't caused so much momentum there for NZD. It's looked a little bit bullish since the news has come out, so I wouldn't completely rule out the opportunity for a double bottom here. But again, I'm looking for New Zealand yen, to rally back into resistance there. We got a very big break of structure not too long ago, so I'm basically looking at a higher low forming for continuation to the upside. We've got this lower high, lower low there, sorry. Then got another lower low, and then this potentially is the first higher low in the sequence, of course, giving us that head and shoulder pattern, and that's your neckline there. So I've been looking for that bounce. I was actually hoping price could pull a little bit deeper. I was looking to see if price can get there, but I don't think we will. The double bottom is still a possibility, so definitely not going to rule that out. It will be great to see if we can get some entries in that area, stops below the low, and then some targets back at the high there. You look at the risk reward, it looks pretty attractive to me. So if price can make that move, I will be all over that trade. But yeah, in terms of direction, I do still see us pushing higher, and for all we know, we might just rally from here. And to be honest, I kind of want to get my New Zealand CHF to break even first before I even do jump in some longs for New Zealand anyway, just because, again, I'm banking on NZD being strong here, so I don't want to do that. I don't want to double up on that. I'd rather just see out that initial trade, at least to break even, so there's no added risk, and then I can jump into a fresh entity position. Yeah, you can search on TradingView. There's actually so many indicators you can look at there as well. To be honest, I'm working on a project that does involve creating your own indicators and developing your own indicators and automated systems for trading as well using AI. So it's a very interesting project, which I think it could be very, in terms of where trading is going, especially in the future, especially with AI advancing as well. I think it's definitely a very interesting project where we're incorporating AI and potentially using that as well as your own brain as well as the trader's brain to actually work together to develop really interesting indicators and strategies as well. So I do think being able to conceptualize your ideas and put them into a system, whatnot, is a very, very important skill, and the project I'm working on does allow you to do that. So I will be talking a lot more about that in the next few days, but yeah, there's a lot of indicators to search through for TradingView, to be honest. A lot to use there, but again, I'm always with the opinion that price is the most important indicator, especially if you're a beginner in the markets as well. I think understanding market structure is just very, very important, and then you can use other indicators to back up your ideas. There's nothing wrong with indicators. A lot of people do hate on indicators for unnecessary reasons. Indicators are very good tools to gauge the market and become and be more confident with your decisions. But again, I think the most important thing is price, of course, because indicators are based on price. So if you can understand price well, then indicators just complement everything. But yeah, New Zealand yen is definitely something I'm looking at for some longs, but we'll have to wait and see. Other yen pairs don't look that great. In particular, CAD yen, this has been somewhat bullish, but again, not the biggest fan of it. I do like how price has retraced, to be honest. We've come back to some nice healthy structure there. I think this is actually a nice buy on the lower time frames. The only reason why I don't like CAD yen is basically how we're moving on the higher time frames. The daily chart just looks way too messy for me. This looks like a range, and it looks like we're trading in the middle of the range, and that's literally the place which I want to stay as far away from as possible, because that's where the most speculation will be, the most indecision will be. Very easy to get wigged out and take unnecessary losses. If you're looking to trade within a range, then I'd always be trying to buy low, right at the lows, or sell high, right at the highs. Getting involved in the middle is where it's very easy to lose money. So although the setup does look good, price is starting to form some bullish structure. We're seeing some higher highs and higher lows. Pull back into a nice area there as well. It's just the conditions do put me off, and conditions are very important too. And if you take this exact same setup, copy and paste it in a trending condition, if you take that 100 trades versus if you take that 100 times versus this 100 times, I can almost guarantee you that you will see better results with the trending condition, just because momentum's on your side. There's a likelihood that momentum will continue. Here, there is no momentum. So CAD yen, I'm staying away from personally, just because the conditions are very flat. CHF JPY, don't have much to say on that one as well. I mean, you could probably argue we are consolidating there too. So again, not really wanting to get involved. And we are failing at resistance quite a lot there too as well. So just not the biggest fan of CHF JPY. It's against a currency which I expect to be weak as well. I'm looking for yen weakness, but I'm also looking for Swiss weakness. So two potentially weak currencies going up against each other. Hence, we're probably going to see very stagnant price action. I'm not too sure which is going to be the weaker either, because I'm banking on CHF being weak. Hence, I'm long New Zealand CHF. But I'm also banking on yen being weak as well. But we'll see which one will be the weaker. But yeah, not a big fan of the price action. We've had a big rally. We're failing at resistance a few times. I think the market is kind of just squeezing between this trend line and that resistance, and then we'll see eventually what the breakout will give us. But yeah, not a big fan of the price action for Swiss yen. So the only yen pair I do like, or yen pairs I do like, is Aussie and New Zealand yen. The other ones are either not showing best signs of risk reward, or the conditions are not great. So staying away from now. I will keep an eye on dollar yen shorts if this can continue to see more upside. I do like the dollar yen shorts actually. So 145.5, if we can push back into that zone, that would definitely interest me for a buy. But yeah, we're not quite there yet. So I'll keep an eye on that as well. For a sell, sorry. I'll keep an eye on that as well. I like the idea of a possible head and shoulder pattern forming and some shorts back into the low. So we'll definitely keep an eye on that. But for now, looking at New Zealand and Aussie yen buys. In terms of the USD pairs, dollar CAD is probably at the top of the watch list for now. Come back to a very interesting area. I'm looking to see what type of entry signals I can get here. I do think USD CAD is very likely to keep falling. We've got a massive zone here, big area of demand, which gave us a very big rally back in October last year. And I think there's a very high chance the market just comes back to retest that same zone. So I do think we're likely to keep falling. We've pulled back into a nice area of supply, if you will. Brief support here, price did push up. Then we had a very sharp drop there to the downside. Now we are revisiting that same area. I do think sellers can be looking to jump back into the market to keep pushing price lower. If not, I do have this range up here, 1.392, big consolidation, big drop to the downside. Both kind of giving us similar opportunities to short dollar CAD. The only thing I don't want to see happen is price take out this high, because of course this is the high which gave us this low. So that is our last major swing in the market, giving us this bearish leg. So that basically keeps me bearish. If the market was to suddenly break to the upside, that would be a bullish signal, and I'll probably look to change my bias completely at that point. But for now, everything's pointing down. So 1.384, 1.392, looking to short and keep things bearish. So dollar CAD is on the watch list as well. What's up, follow the trend? Hope you are doing well. Welcome. So out of the USD pairs, dollar CAD shorts, New Zealand dollar longs, I'll keep an eye on. Oh, if I can spell. So New Zealand dollar longs, I'll keep an eye on, but they're still a long way away from entries. It's either the break and retest at the high or the pull back into the low here in a big double bottom. Not seeing opportunities there just yet with either of those setups. So dollar CAD is definitely the one I'll focus on most. Dollar CHF, not really. It did miss my level last week. I'm not as keen this week to short it, especially because I'm buying New Zealand CHF at the moment as well. Euro doesn't really give me that great of a risk reward. I think it's a better opportunity for the lower time frame. Pound USD I'm not so interested in either. And the Aussie dollar is just kind of stuck in this ascending channel. So I'm not a big fan of that either. I mean, I like the setup down here, don't get me wrong, but we're still easily a week or two away from that actually forming. So there's no point looking at this one too much, because probably won't get a trade this week. So yeah, that's kind of where I'm at with USD pairs. In terms of some other pairs, there are a couple of crosses I'm looking at. I'm still looking at New Zealand CAD, although we had the New Zealand news last night, so I'm not too sure if that will actually set up. Follow the trend. That's good. Oh, did I not go for Euro USD? I completely forgot, my bad. If I do miss out a pair, if someone's requested something and I've just completely not done it, let me know. But yeah, we'll take a look at Euro. Chart's always Charts are all looking messy. No real opportunities with A plus setups just yet. Trump always making things hard. Yeah, I mean, again, that's the cycles of trading for you. There'll be times in the markets where you're going to get a lot of very, very good opportunities, and you're going to have to pick and choose and try not to overtrade, not overdo it. And there'll be opportunities where you're not getting anything at all, and the markets look very dry, and you're kind of like, am I doing something wrong? Am I not seeing the markets correctly? I don't have any setups here. It feels like I'm not progressing. And again, that's just a natural circumstance in the market you're likely to experience. No matter what your strategy is, even if you're intraday on the lower time frames, there will be periods, there will be days where there is just no good opportunity. And the best thing to do is not do anything. Funny enough, sometimes not doing anything is actually what's going to take you forward, because if you can practice that discipline when there is nothing, it means that when there is something, you're already there to take it. There's no hesitation because it does fit your plan well. It is an A+ setup. You're there to take the trade. If you're getting distracted and taking some rubbish trades, it's not going to do well for your equity curve. It's going to make you lose confidence as well and just make your journey a whole lot harder. But yeah, for Euro, very bullish on this one. Looking for price to return back to the high here. We broke out of that kind of descending channel there last week. Haven't really set the market alight in terms of momentum, but it does look like we're likely to keep pushing here to the upside. So I do think more upside is likely. As I said yesterday, as long as price doesn't break through this zone, I'm very, very bullish on Euro USD. I do think price can look to rally to the upside here and of course return back to the highs to the left. In terms of a setup, I was looking at the resistance here for a buy, but of course that didn't hold yesterday. Price did end up breaking through that. I still like the low here, mainly because this is of course our most recent swing low to give us the high. So price basically has to respect that level. If it doesn't, it's a break of structure, and I would be not necessarily bearish on Euro again, but I'll probably just be neutral at that point in time. So we do have to really respect that, and I think that'll be a great place to put a stop loss below and capitalize on a swing back to resistance, and of course maybe back to the high there as well. I'm basically looking at these highs continuing. So I think this could be a nice area to look at, 1.126 I'll call it. On the lower time frames, it does look like price might be reversing. So if you do go and break structure here, there might be opportunities on some pullbacks on a lower time frame to look for a buy. That's if you're interested in the 50-minute chart, something like that. But if you're looking for a bit more of a swing position, which you can trade on the hourly or the 4-hour chart, well, this is an opportunity which I would be more fixated on. And yeah, target's naturally back to the high, and then the swing high up there. But in terms of my analysis for Euro, very, very bullish. Good morning, Dark Sean. I hope you're well. NAS and US 30, of course, we'll take a look. Those markets, I think, have been pretty bullish since we last spoke. I haven't looked at US 30, but I assume it's done something similar to the NAS. So yeah, NAS 100 looking fairly bullish. We're talking about that inverse head and shoulder pattern on the 50-minute charts. When was that? Was that yesterday or Monday? Yeah, yesterday. But yeah, we had this kind of inverse head and shoulder pattern. Of course, this is kind of like our neckline here. And of course, price has broken that to the upside and done that in very, very impulsive fashion, I must say. But yeah, since we've cleared that noise out the way, I do think price is just going to make its way back to highs here and probably see some new highs pretty soon, past 21,482, basically 21,500 we'll call it. So in terms of an opportunity, I mean, I would like to see a retest of this zone here for a buy. I think that would be a very nice place for a setup. But judging how things are looking here, I wonder if price has already made up its mind and already working on a move back to highs from this particular zone, 21,370. very strong shift in momentum. We've kind of broken out of this descending channel here, and buys are looking pretty strong at the moment. So I wonder if we're going to fly from there. If I could pick a zone, it would be 21,300. I think that would be a nice place for a buy, but it might be in fact that price is ready to rally. But yeah, in terms of direction though, pretty straightforward. Expecting new highs past this point. Again, my overall bias for the NAS is a swing all the way back here, 22,176. So I'm very long-term bias here for the NAS. This is just a stepping stone, if you will, for the bigger target. But of course, if you're on an intraday time frame, you're not so much fixated about the all-time highs just yet. I think these highs are more than enough to deal with. So yeah, NAS looking pretty bullish. I'll keep an eye on both levels, but it does look like that first level might have already set the tone, and we might be looking to rally from there. US 30, yeah, pretty much the same thing as well. We've got that inverse head and shoulder pattern. Price rallied, pretty aggressive pullback in the afternoon, and then price rallied again very, very nicely there into the late hours of the day. Now we've had a really juicy pullback. Have we had the retest here? Just missed it. Again, momentum's looking pretty strong. I do wonder, is the market ready to rally here? I don't know. It looks like it might be. If that's the case, we might be on our way already. If we do come back down again, great. That might give us some really nice opportunities at the retest of the high. But I must say that rally is looking interesting. But again, in terms of direction, same thing for US 30 as with the NAS. Looking for us to return back to the high there. I like the way we spiked the downside on Friday. We came back and filled the gap there very nicely. Really strong and bullish engulfing candle on Monday. So naturally, I do think we're going to drift back to highs now. Again, long term, all-time highs is where I see us ending up. But for now, we'll talk about this high. That's the next big target to work with. But yeah, really nice price action. Very bullish here on the 15. I do think we'll just continue to rally. Bullish on the higher time frames as well. I don't see any signs of us slowing down really. So I would only be looking to buy. But yeah, a little bit annoying though that US 30 just missed out on that level. It would be nice if we could actually test that and then buy. But yeah, very, very bullish. And same thing for the S&P as well. Very, very bullish for this one. Basically the same price action. Of course, they're all very similar as well. It's just about, in my eyes, choosing the better one. But the S&P, same situation there too. Strong reaction this morning. I wonder, is price ready to commit to the upside from here? It could be. There's a very strong shift, and we're clearing that trend line there as well. So maybe prices are ready to rally. But yeah, it has left behind some really nice structure just below at 5,900. I'm looking at this spike being the next high low in the sequence for a swing back to resistance, and some higher highs beyond that point as well. You've got the gap here, which I was looking to see if price could fill, but it looks like we haven't. We are respecting the 200 moving average pretty well, so I don't mind that the gap hasn't filled. I like that US 30 has filled the gap. That gives me a bit more confidence about the buy, because I know price has done its job, filled the gap. Now we can potentially rally. The S&P always has that possibility to come back down again to fill the gap before continuing, but the 200 support does give me some confidence that we are, we can still continue here, can still push up. But yeah, S&P looking very good, looking like that's about to push back to highs as well. If I have a look at the DAX, yeah, I mean, DAX looking pretty bearish this morning, but as a whole, very, very bullish market. Had a nice stab to the downside there as well on Friday, and we have rallied very aggressively since then. I like the range prices created over here as well. Drop to the hourly chart, love the range, rip to the upside. I think again, very sensible place for a buy. Again, if price can come back and revisit that level, I think that would be a great place for a long, especially on like a 15-minute chart, and naturally a swing back to highs there. So more upside for the DAX. I know we're looking bearish this morning, but in the grand scheme of things, no real change in price action. Overall, very, very bullish. We are still quite corrective, so I do think a big drop will happen again pretty soon. But in terms of your intraday opportunities, I think just keep looking to take advantage of those high lows forming. No need to overcomplicate it more than that, really. And if I have a look at the FTSE as well, FTSE is looking a bit more fatigued, I must say. Still definitely a bullish market. I think these are the all-time highs as well. So, yeah, I mean, these are still the all-time highs for the FTSE, which I still think we will get to. But we are looking a bit more fatigued here. There is a world where we do come back and test support again at 86.92, but yeah, overall, very, very bullish market. I think we can still very much rally to the upside here for the FTSE. But I would give myself a bit of room for a bit of a drop because we've come back into resistance, had a few attempts to try and break through. Big wick, semi-big wick over there as well. And essentially, we have failed at resistance. So I would wait for markets kind of relieve itself a little bit, approach support again, then use that to go long. But yeah, as a whole, still a very bullish market, and I do think we will return back to highs at 8,900 and probably some new highs past that point as well. So yeah, as a whole for the indices, major indices, if I could speak there. Major indices across the board, bullish is the narrative right now. Yes, there's probably some retracement, a little bit of downside, but overall, if you're looking to buy, I think you'll be on the right side of things. It's just, of course, about timing and positioning yourself well in the market. But overall, indices looking very, very bullish here. See how New Zealand CHF is doing. I think I'll probably go to break even with this one if I can see a strong break above this resistance, because that's kind of, yeah, if price is going to go against me, it's probably going to go against me because of this zone here. You know, we had a strong drop here, price pulled back, and then we had another push to the downside. If price is going to go against me, it's probably because this level is going to hold and keep price bearish. So if we can see a strong break of that, then I should be looking pretty good for the trade there. Not that it will go hit my overall target, that's a different question, but in terms of just, okay, at that point, I don't want to be taking any unnecessary losses at that point there as well. So clear 0.49455, at least with a close. I'll go break even, and then, yeah, the plan will be to secure some gains there. But yes, it hasn't been a particular active week for myself. This is a position from last week. So as of yet, I haven't taken any new positions. It is only Wednesday, so still could take some trades before the week does end. But again, the watch list hasn't been very fruitful lately. New Zealand CAD, I was looking to see if I can. A lot of the pairs I've been looking to trade have revolved around entity and Aussie, so I've been a little bit on the cautious side of things because I don't want to double down on anything. Last week I did get signals for NZD CHF, NZD CAD. Did I get a signal for New Zealand yen? No, I didn't. I got a signal for NZD CAD and NZD CHF, so two NZD pairs. So I didn't want to take them both, so I just jumped into New Zealand CHF. Looking back, I mean, NZD CAD hasn't done anything crazy since then. That was the signal basically coming back into support there. I'll probably be in a similar position right now. But I liked New Zealand CHF a little bit better just because the risk reward was a little bit greater and basically where we're positioned as well. New Zealand CAD coming from this kind of area. Yes, I do think price can break to the upside, but New Zealand CHF is coming from an all-time low. We've got a little bit more to give to the upside, so I expect a bigger move here. So that's why I chose New Zealand CHF instead of New Zealand CAD. and also I do expect to see CAD CHF push up as well. So if I do have somewhat of a bullish bias on CAD CHF, that means I do favor CAD to be stronger than CHF. And if CAD is going to be stronger than CHF, it should mean that New Zealand CAD doesn't move as high as New Zealand CHF, or is not going to be as bullish as New Zealand CHF. So for those couple reasons, I decided to trade New Zealand CHF, but they're very similar setups, similar trades. Yeah, it just because of that situation, I chose New Zealand CHF. Yusuf, when managing a trade, what are the key things you look for before closing a trade early? Well, I very rarely close a trade early. Again, my thought process with managing a trade is to keep things pretty simple. The goal is to close winners on average larger than your losses. So in terms of managing positions, I normally would have a target of where I expect price to get to, which again varies in risk to reward, but anywhere between a 1 to 2 to potentially like a 1 to 9, potentially sometimes the bigger ones. But it could be anywhere within that kind of range there. It just depends on the setup itself and the swing I'm trading. But it does depend. My management does depend on the type of setup as well. Some trades I will just enter and leave price to either hit my stop loss and hit my target. Some trades, if it's a very big trade, then I'll be looking to try and manage and trail stop losses along the way. I try to keep my management quite versatile and quite flexible, because I believe that every setup is its own unique situation. I think if you have one management rule for every single trade you do use, is a good way to manage things, a good way to find consistency. But in terms of maximizing your profit potential, you want to have a bit of flexibility, because no setup's the same. Just like the stop loss size, if you say I'm going to have a 20 pip stop loss for every trade I take, well, there will be trades where 20 pip stop loss doesn't make sense. Either it's too big or too small. You want to be able to adjust that to the setup itself. Same thing with management. You want to be able to adjust your management to the setup itself. If you're looking for a really big swing, it doesn't make sense just to take that trade and just hold on and hopefully it does hit the swing. You don't want to be in a situation where you're buying here, stop loss is there, your target's all the way up there, and price has done all of this, and then potentially can go against you. It doesn't make much sense. But then if you have a entry here and a stop loss here and your target's just there, well, you don't want to be trading too much, because at the end of the day, your target's not too far away. Taking partials along the way here doesn't make too much sense either. The target isn't that big anyway, so you probably just want to hold on for the whole move. Whereas in a position like this, taking partial does make sense, because if you're going to hold on for such a big move, you do want to kind of pay yourself along the way to manage that. So in terms of where I manage trades, there is no kind of set blueprint. It does depend on what I think is best for the position. I do have some rules based on my previous results and going through my previous trades. For example, if I am aiming for anything more than 5R, I will always look to trail stop loss. That's kind of a rule that I have set. If it's below 5R, I won't trail, but I might take partials if situations like, for example, the New Zealand CHF trade I have now. My target there is 4.1, so I won't trail for this one, but I will secure gains at this level here. And then the next time I secure gains will be at the high. But beyond that, I'm giving the trade as much room as it wants to breathe to hit resistance, but I will pay myself here. So yeah, management is always a tricky situation, because you're always try and maximize your returns, but you don't know what's best until the trade is all done and dusted. I think once you do find good consistency in the market, try and experiment with your management. I think if you're still beginning, still trying to find that consistency, have one set of rules. When I first found my consistency in trading, what I would do is I would set every trade to 3R. So every trade I took was set at 3R. Let's get 3R. So every trade I took was set at 3R, take profit, no matter the setup, always 3R. And I would always close half of the position at 1.5R. So when price hit halfway to the target at 1.5R, I'll close half, go to break even, and then hold the rest either to break even or to my target. And what that did was allow me to find consistency, because there was no kind of panicking, there was no kind of guessing of what I should do for my position. There was just set rule, very, very simple, 1.5R, close 50, break even, 3R, close the trade, on to the next one. So that did really help me in the beginning in terms of finding consistency. But what I did notice is that it didn't really maximize my returns. Some setups, 3R was just way too big. I was asking way too much from the market. It wasn't a 3R trade. And some trades were way more than a 3R. And I wasn't making the most out of that. So as I've developed, I've become a bit more flexible. Excuse me. But yeah, in short form, the key things I'm looking at is just basically the distance from my entry to my target, and if there's any significant levels on the way. If there is, I'll secure partials, trail. If there isn't, and the target's pretty small, I'll just let it hit the target or hit my stop loss, of course. Hassan, what is up? Aussie CAD stop loss hit yesterday. Entry, okay. Yeah, I remember this is the position you shared yesterday. Yeah, I mean, what's Aussie CAD doing now? I mean, again, we've had a better rejection at the low, because I remember basically you were buying from that support level, weren't you? You were buying from this low, 0.88700 roughly. Yeah, 798, stop loss 588599. So that was around here. Just about took the stop loss. But yeah, I mean, again, I like the trade. As I said yesterday, I like the trade, I like the entry, I like the stop loss placement. I didn't like the entry. I like the location of the entry. I like the stop loss placement. I like the targets as well. We're not looking for anything too crazy. I still think the buy is there, because essentially the support you were buying from yesterday is still holding. So the idea of the setup is still very much valid. It's still very much in play at the moment. And we very much could still go and hit your target at the high here, which is why reviewing trades is very, very important. And I would say a key bit of advice when you are reviewing your trades, review your trades in like 3 weeks time. With my trades, I now I don't review any of my trades until at least kind of like 3 months has passed, especially because I'm a bit more of a swing trader, so it does take a while to play out on the market to take shape. But in terms of now, I wouldn't review any of my current trades for this month or last month or the previous month before that. I would only review my trades now for the first quarter, so Jan, Feb, and March. And especially low time frames as well. Probably wouldn't wait that long, but at least give yourself 3-4 weeks, at least a month, to look back on your trades there, because once you do look back on your trades in a month's time, all the kind of emotion and the analysis you had at the time is all gone. You've completely forgotten all about that. So you look back at that trade with a fresh set of eyes. Almost you've completely forgotten about it, to be honest, in a month's time, which is good, because when you look back, you kind of look back objectively. Was this a good position? Did it make sense with the market? Did I follow my plan? Was the stop loss in a healthy place? Was the targets make sense? You address all those things with a clear head, because so much time has passed. And you can see what the market has done as well. Whether it did actually see a swing back to your target, or were you completely wrong with the swing and the market dropped. So I would look back at this position at least a couple of weeks from now. But at the moment, the support level you're buying from is still being respected. So in terms of my plan, if I'm looking to buy from a support level and I do get wigged out, I would always look to re-enter as long as the support level is still valid, because that's the idea of the trade. I'm expecting support to hold for us to rally. So looking for re-entries after getting stopped out is important, because especially with us retail traders, we try and have very small stop losses to maximize our risk reward, which is good, but it does lead to some unnecessary losses. So you don't want to be afraid to jump back into the market if the trade setup is still valid, of course. But yeah, we still respect the support pretty well. I still think we can rally. I'm still quite bullish on Aussie CAD. I like the way we kind of spiked into this kind of area of demand here. We had a brief consolidation. Price did rally pretty hard to the upside. Looks like we more or less just about wicked into that and now have used that to our advantage. So I like the upside here for Aussie CAD. I think we can get back to your level there, your target. Not really seeing much momentum, but then again, Aussie CAD is a bit of a choppy pair. So yeah, I'm not expecting the market to light up with momentum, to be honest. But I would still say the setup looks good. If we were to return back to support, I think looking for some entries could make sense. What I mean is managing losing trades when it's going against you. What should you look for in order to exit early? Yeah, I'm not the biggest fan of that, to be honest. I think you'll find a lot more success in trying to make more of your winners than try and get out losers early. Because you've got a stop loss there for a reason. There's been many times where price has been 80, 90% of the way to my stop loss, and then potentially reverses and becomes a winner. I had a big win earlier this year with Aussie C Chef. That was very, very close to hit my stop loss. I had a trade over here. This was back in Feb. My stop loss was just above the high there. And this wick over there was very, very close to taking me out the trade. Very, very close. Then it turned out to be a very big winner. I ended up getting out around here. So I've experimented with that before, trying to minimize your losses, how you can get out a bit earlier. From my experience, you are better off trying to maximize your winners rather than trying to get out of your losers quicker, because you put your stop loss there for a reason. If you bet on support to hold and you put your stop loss underneath support, it's there for a good reason. Trying to get out early does run the risk of potentially price still pushing in your favor, and then you have to look for a re-entry. Then you probably would have closed some loss unnecessarily as well. I'd rather take the full loss than not miss out on the winner. And again, you can look back at your data, look back at your past results, and you can back test that. But from my experience, trying to get more out of your winners, trying to hold for a bit longer, look for bigger targets, is going to provide more profit for you in the long run than trying to get out some losses quickly. Because let's say instead of taking a full loss, you take a half a loss, you take a 0.5%, let's say you're risking 1% on a trade, that's your entry, that's your stop loss, but you get out here, so you close half. And let's say it does go and hit your stop loss, but you walked away for 0.5% loss instead, which is great. You saved yourself 0.5%. But looking in terms of profit, let's say you normally have your target at, let's say 3R, but you managed to hold on to 5R. Well, that's plus 2 extra R. So you made 2 more R there, whereas here you only saved yourself 0.5R. There's not so much room you can work with there. The max loss you take here is 1R. Whereas with a winning trade, you can take a 10R potentially. So you'd have a lot more success trying to maximize your profits, trying to maximize your winners, than trying to minimize your losses. Because everyone's so scared to take a loss. Everyone just wants to kind of make sure the losses are as tiny as possible, because everyone's scared to take losers and doesn't want to take a loss. And of course, who does? But trading favors people who are less fearful, and being less fearful means being able to take a loss, and a good loss as well. I'm not saying just a random loss here and there. There's a good quality setup. You take the trade, you risk manage well. That's a good loss to take. But you benefit so much more trying to maximize your winners than minimize your losses. Euro Aussie, okay, I'll take a look. So true, yes, I had 2 losses and it was very frustrating all the time. I didn't know why it fell. Again, Yusuf, trades are not supposed to work all the time. You're not supposed to know why a trade failed. A lot of people will tell you that, okay, you need to go study why the trade failed. We're technical traders, or even if you use fundamental or retail traders, we're not supposed to know why the trade has failed. There's so many components of why a market goes up and down. We're just using patterns. Patterns don't work all the time. The trade failed because it was supposed to fail. As long as you followed your edge, you're not supposed to win all the time. You could take 5 losses yesterday, and it will be frustrating, of course. And you might not know why there's 5 trades have failed, but that's the reality of trading. You're not going to get to a position where you're going to win all the time. Because if you could understand why each trade failed, then eventually you won't lose any trades because you understand why they fail, of course. You won't get to a point where you have a 100% win rate. Even people with 80 or 90% win rates, they will have very, very small risk to reward, like a 0.5R. To maintain the high win rate, they have to have a very small risk to reward. They have to be very in and out of their positions. If you look at the best traders of all time, some of them have like a 20% win rate. Of course, they have crazy risk to rewards, but you don't want to be in a situation where your losses are trying to define you. If you keep the risks small, manage them well, you're supposed to take losses, get used to them, become strong within your losses. That would do you so much more good than trying to avoid them and understand why I took a loss. Because from experience, it's a painful journey to go down, taking a loser and then being upset that you took a loss. Looking back now, you just wasted a lot of time. If you know how many notebooks I filled up, what's the notes? Learning how to find a decent setup for these currency pairs. Do you think that was crazy? Yeah, I mean, that's good though, DT. That's good. It means you put a lot of effort, a lot of work into it. And at the end of the day, that's what you need to do. But yeah, I think the best advice I can give someone, well, two good pieces of advice is whatever strategy you want to stick with. Don't deviate. The best traders are traders who are very good at what they do in terms of their approach to trading. They don't know everything, but whatever they do, however they approach the market, they do it very, very well. So get really, really good at one particular thing. Similar to the Bruce Lee famous quote in terms of, I fear the man who has mastered the kick 10,000 times, not 10,000 different kicks, or however it goes. But you guys get the point. Same thing with trading. And number 2, get comfortable losing. Of course, you will be frustrated. I'm not saying you won't be frustrated. Even to this day, I don't like taking losses. Who does? But if you become comfortable with it, you'll be so much better off for it. Trust me. Embrace the losses. You're supposed to lose here. And the funny thing is, you can lose more trades than you win and still be very, very profitable. So become comfortable with it. And if you can do that, you'll be in this really good position to succeed. Very good position to succeed. If you can't stomach losses, then you will not succeed 100%. No matter how good of a setup you trade, no matter how good your edge is, if you can't stomach losses, you will not make it in trading. Very, very simple. No matter how good of a strategy you use, the moment it takes a loss, you lose your head, you're frustrated, trying to find out reasons why it lost, you won't make it, because that will make more mistakes. You will end up deviating, you won't follow the edge, and then you're back to square one. That is the best advice. And again, trading is difficult. Look at the numbers. How many people actually are profitable and brokers? Probably like things like 10 or 20% of retail traders actually do make money. Well, to be 10 or 20%, you have to do things that are against the grain. If it was easy, everyone would be doing it. Anyway, let's see how. Oh, I entered in the wrong place. Okay, we are still rejecting that resistance there. I need that to break. Again, this is just the level for me to go break even. I'm not looking to take profits here. This is the level where I will take profits. But in terms of other setups which I can probably enter, again, I think pound NZD probably was the one, but to be honest, I'm okay to let that one slide. It formed whilst I was sleeping, and two, I'm already kind of buying NZD, so I'm not too bothered about jumping into another NZD pair, especially when I'm in the same direction as well. So pound NZD, maybe if I wasn't in New Zealand CHF, I probably would just try and enter and take the worst entry. At least the 1 to 2 back into the low, so I wouldn't mind that. But yeah, because I'm already in NZD CHF, I don't see the reason to double up until I can get that to break even. I think for now, dollar CAD is probably the preferred opportunity to keep an eye on. It's a good setup, so it was always a always a part of the watch list since the start of the week. So I do expect to see more downside here for dollar CAD. I'm still pretty bearish on the DXY, so I need to keep a close eye on that. That's about close in 13 minutes, and it's not really doing anything too crazy. I like the rejection, but I need a little bit more than that to be really convinced. But yeah, USD CAD sales look the best for me, and I do expect it to come back into that daily zone just underneath us as well. So I think I could find a decent risk to reward setup there, and either of these levels look good, whether we respect the first level at 1.383 or the second level at 1.3894. Either of these levels I think would be great levels to short from and see a push back into the low there. So I'm going to keep a very close eye on dollar CAD this afternoon. I don't think any other setup. Again, I still like New Zealand CAD buys, but I'm in New Zealand CHF, so not completely fussed about that trade there. Yen pairs, New Zealand yen, not so eager to get in because I am still buying NZD, of course. Aussie yen, I wouldn't mind though. I know it is related to NZD, but it is still a different currency, so I don't mind getting into a long for this one. But again, I need price to revisit support there. It may or may not happen, but I'll wait and see. Hopefully we can get an opportunity there. And the crosses, pound Aussie, not the biggest fan right now. Euro Aussie, I do like this one. I wanted it to push a little bit higher. I like the level here, 1.77. 1.77. It seems to be respect to resistance pretty well there, but I'm kind of hoping we do break that to tap that level, then drop. Then hopefully I can get the entry. This one was 100% my fault. The trade was on YouTube when I failed to realize there was a double on the 15 and it was at support level on the fallout. Well, again, then that's where a lesson learns. That's where the lesson learns as well. Because, of course, having the higher time frame in your favor is definitely going to help your trading rather than hinder it. But again, no trade you take will be perfect. You will always find a reason why a trade didn't work out. I think that's another tip to give you as well. With every loser you take, you always find a reason why it didn't work out. And that's not necessarily a bad or a good thing, because you can find a reason why it didn't work out, and then you can use that to help improve your trading. But you always want to remember that trading is probability. You could take the same trade in another scenario into 4-hour support, and it could potentially play out. So the very confidence that was against you potentially might have failed the trade in another scenario, might not have mattered, and the trade could still succeed as well. So the key thing I'm trying to get at is that if you can have an edge, develop an edge with rules, stick with that edge, and then only readjust once you've had a good 50 or 100 trades live, and then you can look back at your trades and see where you can potentially improve, because that way you can see actually how you're applying the edge and how well you're doing yourself, not just in back testing. And you've got a good sample size there as well, because then you can see repeating patterns rather than just one trade, because one trade doesn't define anything. Like I said, you could still take the same trade on a different pair. Potentially that trade played out even if you were trading to 4-hour support. Then, then you have conflicting information, because one trade it played out despite the 4-hour level, whereas one trade it did fail. It respected the 4-hour level. So you got conflicting information just because you're isolating two trades. If you look at 50 or 100, well, that will give you so much more information about what you should do going forward. Because I would agree, you don't really want to be looking to sell into 4-hour support if you're on the lower time frames. If anything, you want to be buying from that. So selling into it doesn't make too much sense. But the key point is you want to build a trading log of numerous trades and then use that to really base a decision in terms of going forward. Because if you just base it on one trade, you'll get conflicting information. One trade will play out, one trade won't play out. Then you'll be like, should I take it? Should I not take it? Then you'll find another reason as why that trade played out, and then you use that again and the cycle repeats. So build a log, a trading log of all your trades. If you're trading on MT4, you can just download your history. I'm sure CTrader has something similar to that. If not, just keep a Excel spreadsheet or even just a pen and paper of the trades you take. And that will be so important in terms of understanding where you can improve and where you're potentially going wrong. Any bias on GJ this week? Yeah, pretty bullish on GJ. I'm pretty bearish on the yen. So I do think yen can still weaken. I do think the yen still got room to the downside. As a whole, we're still seeing higher highs and higher lows. So GJ for now, I do think is likely to rally back into resistance there. That's 196, I'll call it, as my target for GJ this week. In terms of opportunities, I think there's a really nice one on the hourly chart. Let's say if price can come back to this area here. I think that would be a phenomenal place for a buy. And from there, I'll expect price to continue. We had a nice double bottom here. I think that's is that earlier in this week or last week? Yeah, last week, Friday. And since then, we've seen some really healthy bullish structure. So for now, I would be gearing up for some yen buys here. Pound yen buys, 194. Looks really, really good. I like the momentum there. This bearish move seems to be very corrective. So I'm seeing signs of a pullback here. So I think the chances of us seeing more upside are pretty high now. And a pushback to 196 makes a whole load of sense to me. And then, of course, naturally 199 is where I would see price going on the daily chart. But for this week, yeah, bullish bias. And the yen basket as well. I'll be pretty bearish on this one. I'm looking to see if price can return back to the lows here at 66.10, which should give us a pretty big move for the yen pairs if that was to happen. Last application earlier. If not, I'll have no choice but to contact Beyonce. Yeah, I think Beyonce should be able to take up that offer. I'm not gonna lie. I think she's got some free time. No problem. Follow the trend. Happy to help. Can we call this a bullish flag on the full hour? Yeah, I would say so. Again, a bull flag is kind of just price giving you a correction within a kind of a symmetrical channel. Really doesn't always have to be, completely symmetrical, but a bull flag is just essentially price just giving you a very corrective pullback against the trend. Essentially, there's your momentum, there's the flag, there's your channel. More or less, that's your bull flag pattern. You can, very much argue that this is a bull flag as well. And bull flag patterns are probably one of your most common patterns you will see in the market. They do come in different shapes and sizes. Sometimes you get really big ones like I mean, I probably wouldn't give this a bull flag. It needs to be a bit tighter than that, but it's the same kind of idea. This is a nice bull flag pattern. The trend wasn't so impulsive, but it was a nice kind of correction. Then you get the continuation as well. This is, like I said, I probably wouldn't give it the bull flag. It's a bit too slopey for me. It needs to be a bit more correct, a bit more tighter than that. But it's the same idea there as well. You could probably even argue that this whole thing was a big bull flag there too. But yeah, very, very common pattern. You see that everywhere in numerous markets, not FX alone, commodities, stocks, indices, crypto. It's a very, very common pattern. It's just how the market moves essentially. And so basing a strategy around that is not a bad idea. But again, with everything you do, you have to be very particular. But yeah, I would suggest this is a bull flag. I mean, there's more than one way to trade it. You could either try and anticipate the lows to form. So if you can get another push back to the low end of the channel, trying to catch some buys here to trade it back to the high of the range. And of course, expecting a breakout is one way to do it. The second way to do it would just be waiting for price to clear the high and then buy the breakout. Or what some people do, they actually wait for price to clear the resistance and then buy the breakout there. I think the trade is already more or less done by then, to be honest. I preferably want to be in at the lows. This is where I would try and get involved for the bull flag, which is probably the more riskier trade because still within the channel, price sure might give you a nice bounce, but we still very much could roll over again. So you do run the risk of that happening, but you could counter that by going break even by then. When price does hit the up end of the channel, remove risk, hopefully catch the breakout. If not, worst thing that happens, you walk away for break even. If you do catch the breakout, well, you're positioned very, very well to take advantage of that. The risk reward is maximized. And yeah, you can swing it back to the high and maybe further as well. I'm not really a fan of the breakouts, but breakouts are definitely ways to take advantage of this as well. But yeah, I would call that bull flag. Market's looking very bullish. I think there's a lot more upside to be had. I think probably pound yen is looking like one of the cleaner of the yen pairs. There's another bull flag there for you in euro yen. I think euro yen's a little bit more on the choppy side of things just because as a whole we are quite choppy. We're just bouncing back and forth in this range here. But we respect the support very well. So I do think euro yen here is still likely to rally back into 165 and clear that as well. And again, if the yen basket is going to drop, you're more likely going to see these yen pairs rally together. CAD yen as well is in a nice place. I don't like it because of the conditions. It's very, very choppy, but in fairness, it's respecting support pretty well. It could potentially rally from there. After all, everything is probability at the end of the day. But yeah, we could definitely push to the upside from that area there too. But I just don't like the conditions at all. The two yen pairs, I'll definitely keep an eye on Aussie yen and New Zealand yen. Not too sure if I'll get entries, but there's nothing wrong with waiting and seeing, of course. I think NZD's a little bit strong right now, so I don't see us coming back down. Anyway, but yeah, the pair I'm going to spend the most time focusing on will definitely be dollar CAD today, dollar CAD shorts. Very nice area for a short. If this area doesn't hold, well, got another nice area up there, just above 1.39. Depending which level can hold, I'll look for entries, targets at least back to the prior low, 1.37. But as I said, I like that daily zone just below us at 1.36. So very, very bearish on dollar CAD. Very bearish on the DXY. The 4-hour candle is about to close there for the dollar. Not closing in great fashion. I mean, I'm not looking to short now. There is no entry for me on dollar CAD anyway, so I'm just going to wait to see how things develop. We might still push a bit deeper. I'm looking to enter on the 4-hour chart. 4-hour chart looks pretty bullish to me still, so there's nothing there. DXY, yes, nice bearish candles. Starting to see some signs of selling pressure enter the market again, but overall nothing really too crazy or too much to get excited about. But again, as long as price can respect that high there, I stay bearish on dollar CAD. Stay bearish on the DXY and dollar CAD for that matter as well. I'm looking for the swing back to 98. So if we do see USD get back to 98, then there's going to be a very high chance I do see dollar CAD get back to these lows and probably 1.36 as well. So yeah, USD CAD shorts is probably the pair I spend the most time on today. Of course, I just manage my New Zealand CHF trade as well. But there's not much to do there. So dollar CAD hopefully might find an entry. If I do, I'll let you guys know. But anyway, guys, we have come to the end of the stream. I hope you have found it useful, enjoyed it, informative, entertaining somewhat. If you have enjoyed it, guys, please be sure to drop a like. It does really help out, help promotes the content, promotes the channel. So I do really appreciate everyone who's liked the stream so far. If you haven't, please go and do so. It does help out. Subscribe to the channel, of course, and hit the bell so you don't miss out on any streams or uploads in the future. Make sure you do check out the Discord channel to Elevating Traders, completely free to join, linked in the description below. You can find updates there, chat with other traders, chat with myself as well. If you are looking to join a community, go check it out, completely free to do so. But guys, really appreciate each and every one of you tuning into another stream. I'll be live again tomorrow, same time as always, 10 a.m. to 12 p.m. UK time. So if you're free, come and say hi and let's have some chats about the markets. But again, appreciate it, everyone. Have a great day, and I'll catch you all in the next one.